Okay, let's get to those top picks from Jamie. Jamie, you're going with the fashion retailer Arissia as your first idea.
Yeah, so Arissia, we talked about some of the current drivers when we talked about Lululemon. We think the Arissia customer and the Lululemon customer have a lot of overlap. Right now, Arissia is predominantly focused on the women's fashion, although they are starting to move more into men's with a recent acquisition and some of their products that like the Super Puff jacket. But when we look at Arissia, they've had tons of success moving into the United States. They have about 40 locations right now. Pretty clearly they're going to get to 100 locations when there's major metro markets like a Phoenix and Atlanta that don't have an Arissia in the state. So lots of infill opportunities to add new stores. The store economics have been getting better and better. They're starting to generate about, last 12 months was 16 million in revenue for a US location. Canada, the economics are improving as well. And that's really just due to the e-commerce penetration, increased assortment. And, so all while they have very healthy gross margins, strong balance sheet, and a top-notch management team. So when we look longer term, Arissia is going to grow, but are they going to turn into an Abercrombie where you have a store in every mall and you trade at 10 times PE? Or is it going to be able to sort of keep these economics, expand methodically like they've done? And, we think it could turn into a company like an Inditex, which is the owner of Zara, and is 10 times the size of Arissia global presence. So there's still a long runway for Arissia if they continue to execute their current strategy, and that's all they have to do. They just have to continue executing, doing what they've been doing the last 35 years. At 19 times next year's earnings, we don't think it's expensive, and we think this is a company that can grow earnings in the mid-teens for a long time. So yeah, it's one that at $38, I'd definitely be loading up on.
Linamar is your next idea. You did touch on auto parts earlier. Why would Linamar be a favorite name?
So Linamar, just the starting point, the valuation, it's not always the best reason to buy a stock, but we think Linamar is so cheap right now. Again, it has no debt, it's paid off, has no net debt, it's paid off most of its net debt over the last couple of years. They're buying back stock, 35,000 shares a day. And then this is a company that if you even go back 15, 20 years ago when the big Detroit automakers were sort of dominating the auto sales, Linamar was trading at a much higher P, probably in the 15, 20 time range. Right now it's trading at, if you believe management's numbers for double-digit EPS growth in 2022, it's trading around an 8 times PE. So lots of room for that number to grow as markets improve. And again, Linamar has been constrained on supply side as OEMs can't get chips. They've been constrained on some parts for some of their agriculture and industrial products. And we see all those starting to abate. So while inflation is an issue for these industrial companies, it's an issue for almost every company around the world. So they've historically been pretty good at managing that type of stuff. And we think that as these products and backlogs improve, that sales are going to flow through and you're just going to get that 10% earnings growth for the next couple of years. And, from a value perspective, I don't know if there's a better value name out there right now.
Okay. And then finally, you have an aviation idea, Airbus.
Sure. So we talked about travel, how, there's huge pent up demand over the last 2 years. Travel's back. Now we're into the cross-border, transatlantic, trans-Pacific is going to come back with Japan just starting to reopen to tourists and China starting to reopen as well. So we think the next couple of years are going to be very, very strong for travel. Airbus operates in a duopoly with Boeing, obviously. Boeing's had its fair share of issues. Airbus is coming out of the pandemic in an extremely clean position. We think their A321neo single narrow-body aircraft is the best one on the market. They have net cash again on the balance sheet, so no financial risk. And then there's also a little bit of a kicker from their defense business. The defense business is probably going to boom in Europe over the next couple of years. So Airbus, they have a 10-year backlog for their airplanes. Global travel is going to boom, and it's really just a matter of if they can deliver they're going to raise their production rates, and if they can do that cleanly, we think the cash flow is going to come through, and Airbus is going to look very attractive at its current level.